Greetings and good afternoon to you all. Thank you so much for joining us today. My name is Lorelei Gonzalez and I am the program director for HERdacity. This webinar series is brought to you by HERdacity, which is a nonprofit based in Austin, Texas, dedicated to inspiring confidence in women to achieve their professional goals. So we are here to be a resource to you on your career journey, wherever that takes you. And we are really proud to be a partner in that mission. So joining me today to talk about investment, we have the founder of Bravely Go, a feminist financial education company based in Austin, Texas, which has been featured on NPR, ABC News, Glamour Magazine, and many others, Miss Kara Perez. Hi, Kara.
Hello. Did you like that dramatic reveal of here I am?
That was wonderful. Thank you for the suspense.
I was like, I'm really going to build up to this. Thank you so much for having me. I'm so excited to be here.
It is absolutely our pleasure. So for all of y'all watching, there is a poll going right now. Go ahead and participate in that, and I'm going to hand it over to Kara. Thank you, Kara.
Thank you. So hi, everyone. I'm so jazzed you're all here. Like Lorelei said, I have a company called Bravely Go. We do feminist financial education. That doesn't mean we're just for ladies. Anyone can be a feminist. And you're going to hear a little bit more about me and my money journey, but I'm very excited. I love talking about investing. So let me share my screen and bring up my presentation for y'all. And let's get started. So, hold on just a second. My computer is sad and old. Okay. Oop. What is this? I'll leave the poll over there. So, welcome to How Not to Die Broke. Such a fun title. Let's see. So I'm Kara, and I want to tell you a little bit about my money story before we get into this, because I know investing can feel really intimidating. So one of the polls that we have is, are you investing already? I'd love to know if anyone here is already investing while I tell you my story. So I graduated college in 2011 with $25,302 in student loan debt and a degree in English. I studied critical race theory, and it was very much so the aftermath of the recession, and I could not find a real job to save my life. So I waited tables for the first 3 years out of school, which is very much so a real job in the amount of labor it requires, but is not so much a real job in terms of benefits or healthcare, things like that. And still to this day, I've never had a full-time job working for someone else, and I'm 32 now. So in 2014, I had what I like to call my quarter-life crisis, and it revolved entirely around money. I was not making very much. I made $18,000 that year, and I still had a ton of student loan debt. I still had about $19,000, $20,000 in student loans. And I just realized, like, no one is going to come in on a white horse and save me. Like, when it comes to money, I didn't grow up with very much financial education. My mother was not really a resource around that. And none of my friends were really like talking about money or knew anything about money. So I realized I had to go out and find the tools on my own. So in 2015, I made $32,000. I started freelancing. I worked a couple different part-time jobs. And that was the year that I paid off my student loans and I started investing. So I maxed out my IRA, which we're going to talk about if you don't know what that is, in 2015. And I can honestly say that learning about money changed my whole life. And it led me to this fabulous world of being my own business owner and becoming what you would call an aggressive investor. So, I really, really believe that investing, especially for women and especially for people of color, is the long-term path to financial stability and to ultimately wealth. I come from a low-income background. I grew up in a single-parent household. I have 2 siblings. We were on food stamps for about 6 years. And I'm biracial, very, very white, but my dad is from Dominican Republic. And I firmly believe that investing is a crucial and essential part of my financial health. Like, without investing, I would not have the personal capital that I currently have. And without investing, I wouldn't be able to grow that to even more stability. So since 2015, I have made investing a personal priority, even while I grow my own business. And we can definitely talk about that at the end if anyone has any questions about that. If you're an entrepreneur or freelancer, happy to discuss. And it's been a fabulous journey. I just love talking about investing. I'm very jazzed. So let's start very big picture. Investing means taking some of your money and giving it to another person or business in the hopes of a higher return than you would get without doing that. So if you invest in real estate, for example, you are saying that I believe by buying this $300,000 house, I'm going to get more money in either rent or in selling that house eventually than if I did not buy that house. And if you invest in the stock market, you're saying, I believe the value of the stocks that I've bought will bring me more money over the years than just leaving my cash in a savings account. That is at its core the most basic definition of investing. Now, there's a lot of different types of ways that you can invest. Obviously, you can invest in real estate or the stock market like we've just covered, but you can invest in small business. You can invest in yourself. There's all sorts of ways you can invest. We're mostly going to be talking about the stock market today. But again, if you have any questions, for other things, bring them at the end. Oh, okay. The poll just popped up. Love it. Okay, so 69% of you are already investing, 25% of you are not yet, and 6% of you are unsure. Great, well, hopefully by the end of this, you'll be clear on whether or not you're investing. So let's talk about what it's like to be a lady investor, because it is very different to be a lady investor than a man investor. Unfortunately, I wish that wasn't the case, but it's true. So women stand to lose $1 million over the course of their career due to the wage gap and the investing gap. You've probably heard about the wage gap. That gets a lot of news and airtime, and people like to get up in arms about that. But there's also something called the investing gap, and that is also negatively impacting women. Now, 1 million is actually just kind of a rough number here because it will depend on what type of woman you are. If you're a white woman, we know that white women make more than Black women, for example. So you are not as negatively impacted by the wage gap and the investing gap, but you're still negatively impacted. So some people are actually going to lose more than 1 million, and some people are going to lose right around, and by people I mean ladies, right around $1 million. But that's insane, right? I think about this all the time because I'm straight and I'm in a relationship with my boyfriend, and I'm just like, just because you're a dude, you're going to have $1 million more than me. Just because you're a dude. Ugh. I hope you're outraged because now I'm all outraged. So here are the facts on the wage gap. So we know that Latinos earn about 54 cents to the dollar of a white man. Now that's on average. That can also be broken down according to what ethnicity you actually are. Colombians earn more than Guatemalans, for example. And we know on average, Asian American women earn about 90 cents to the dollar of a white man. Again, that can get broken down, Japanese women versus Korean women. But here again, we know these are the facts. This is not me playing the social justice warrior here. These are just the facts of the world that we live in. And I think it's important that we understand these facts in order to make the best investment decisions we can for ourselves. So let's talk about how investing can help women specifically when it comes to these types of gaps. So here are some statistics for you. Only 52% of US women have started saving for retirement. Oh, this is a 2017 statistic. And only 55% of women, or rather 55% of women, feel that investing is not for people like me. I mean, I can't see you right now, but go ahead and raise your hand if you've ever felt intimidated by investing. If you've ever felt like, ugh, this is just above my head, or it's not something I need to concern myself about because it's just like, it's not for me. I've definitely felt that, and I'm a money pro. When I first started investing, it was very scary. It was very intimidating. You feel like the stakes are super high, and you feel like it's a language that you don't really speak, and you don't want to make a mistake. You don't want to embarrass yourself, and you don't want to screw yourself, frankly. So it's very understandable. On top of that, women carry more student loan debt than men. Women are more likely than men to graduate college, but it comes at a price, a literal price. So investing is not going to solve the wealth gap in the United States. It's not the only thing that we can do to solve the gap between men and women, but it is a really good start. And it's something that we as individuals can take control over in our own lives. And the great news is, ladies, women have been shown to be better investors than men. Their investment portfolios return higher than portfolios run by men. So we are good at this. We just have to get into the game, okay? We got to get off the bench and into the game. I also really want to draw attention to the fact that having your own investment account can protect you from financial abuse, Or frankly, doesn't have to be that serious. It can protect you from things like time spent out of the workforce to care for family. The great thing about investments is that to an extent, you don't have to pay a ton of attention to them for them to fluctuate, right? To grow or to go down if we're in a global pandemic. And so if you take time off work and you're not actively earning a salary, your investments can still be working for you, meaning you're still growing wealth over time. So that is a way to protect yourself from retiring into poverty. And women are more likely than men to retire into poverty. I believe the statistic is 1 in 5 women will retire into poverty. And that's in part because we live longer than men, we earn less than men, and we start investing later than men. So it's just a whole, I like to think of it as a tornado, just a tornado of crap, really, that is coming for us. But learning about investing, y'all being here today, is a way to get that tornado out of our way. So let's talk about, where do we do this investing? So like, what is the stock market? Like, has anyone ever, do you guys know what the stock market is? You ever sat down and thought about it? Because it occurred to me about 7 years ago. I was like, I have no idea what the stock market is. When people talk about the stock market in the United States, they generally mean the Dow Jones and the S&P 500. Now, these are stock indexes. An index is a collection of the biggest publicly owned and traded companies in the United States. So there are a lot more indexes. It's not just the Dow Jones and the S&P 500, but if you're ever paying attention to the news, especially recently, as the market's been doing a lot of this, you're going to hear the phrase like, the Dow closed at -2%, right? Or the S&P is up 500 points. So that is mostly what people pay attention to because they have the biggest companies in the United States in them. So the S&P, which stands for Standard & Poor, it tracks 500 companies. Nice and easy to remember, S&P 500, 500 companies. The Dow Jones tracks 30 companies. And so these are giant conglomerates. These are Apple, these are Google, this is Nike, McDonald's, American Express, these huge international companies that are based in the United States. So when people talk about the stock market, know that they're talking about the Dow and the S&P in large part. So I mentioned real estate at the beginning. I want to talk about it now because real estate has historically been a long-term path to financial stability and wealth for most Americans. 2008 kind of changed that a little bit for us, and we're definitely still dealing with the ramifications of 2008, but it's really important when we talk about investing that we talk about real estate because a lot of people want to get into it. So the thing about real estate investing, it's not always an investment. Like buying a primary residence where you and your family are going to live is generally not considered an investment. However, by buying your primary residence, you can potentially eliminate your own housing costs. So if you buy a house and you rent out a room and that covers your mortgage, now you don't have to pay for the mortgage yourself. Your roommate is paying that, right? Or if you rent out, maybe you have a shed in the back and you rent it out to your neighbor who has 6 lawnmowers for some reason, and he pays you or she pays you, $200 to house their lawnmowers. You can make the purchase more of an investment that way. Housing is a long-term investment. I know HGTV shows us that you can buy a house, flip it in 6 weeks, and make $200,000 profit, but that is largely not going to be the story for most people. And flipping comes with a lot of costs. So you are buying a house and you are holding on to that asset over the long term. We're talking 10, 20, 30 years. The general piece of wisdom is don't buy a house unless you want to be in that area for at least 5 years. But then with a house, you are also doing something called building equity. So right now I rent. I actually don't own my own home, and I pay rent every single month. And that rent is doing nothing but lining my landlord's pocket for me. Like it's not doing anything for me but lining my landlord's pocket, and that's fine. I mean, he's using the money to pay his mortgage and stuff. But if you buy your property and you make your mortgage payment each month, you are repaying the loan that you've taken out at the bank, and you are building what we call equity. So you are owning more and more of your home over time. So eventually, hopefully, you own your home free and clear, no mortgage. And then if you sell that home, you get all the money. So if you have a $300,000 home and you own it free and clear and you sell it for $400,000, you're going to pay taxes and you're going to pay broker fees and all of those things. But after that, let's say you walk away with $350,000. That's nice. Now, when we talk about the stock market, which here is represented by my piggy bank, it's much more hands-off. It is, you know, you don't have to worry. Houses require maintenance, right? Your dishwasher could break and someone's got to fix it. If you live in Austin, Texas, and it's, you know, 100 degrees 6 months of the year, you got to have an AC unit. And if that breaks, you have to pay for that to get fixed. You don't have to do that in the stock market. Your dishwasher is never going to break in the stock market. That's nice. So there's lower maintenance fees and it's much more hands-off. It's also a way lower entry cost. So with a house, you have to get the down payment. You have to pay those broker fees, right? The real estate agent fees. You have to pay property taxes. With your stock market investments, you have to make the initial investment. Of course, you know, like I'm investing $1,000 into Google or what have you. You may have to pay a transaction fee. You may pay an annual fee, but it's generally way less money, which makes it easier for most people to get started than real estate. And then finally, there's higher risk and reward in the stock market. As we've experienced this year, the market can go super high and then it can go really low. And generally the housing market moves much more slowly, and without a 2008 scenario, it's not going to be sharp spikes and sharp dips. It's going to be much more kind of like a slow and steady kind of growth, whereas the stock market is going to take you on more of a wild ride, which can be a good and bad thing. So here's what they have in common. Both have value dependent on outside forces. So the stock market and the housing market both move outside of what you and I are going to do. We do not control, I mean, we as like a collective humans control both of them, right? Of course, but you and I as individuals, we don't control the housing market. I wish I controlled the housing market. Damn, that'd be amazing for me, but I don't. And it's the same with the stock market. I, as an individual, do not control the stock market. The stock market and the housing market are going to be impacted by things like a global pandemic or politics, or like if Amazon shut down completely right now, the stock market would, bad things would happen, right? So major business moves. You can make either one very profitable. I have a lot of friends who've made a lot of money in the real estate market, right? And we know historically a lot of people have been able to do that. And the same with the stock market. And both should be viewed by casual investors, which I'm going to assume is most people here today, as long-term investments. So the same way that you are investing in the housing market for 10, 20, 30 years, we want to be doing the same thing with our stock market investments. You don't want to buy something on Monday and then sell it on Friday, in large part. There is something called day trading where people do that. They trade daily. But most people don't want to do that because it's a lot of time and energy spent paying attention to the market. And most people are like, I have a job, I have a family, I have Netflix to watch. Like, I don't have time for this, you know? So if we buy and hold, that's something we're holding for 10, 20, 30, 40 years, depending on how old you are when you get started. Okay, I'm just gonna have a sip of my water here. So let's talk about retirement accounts. This is where I always encourage people to get started investing. And those of you who have already started investing, you're probably investing through a workplace 401k or something like that because our company brought it right to you. Great. Of course, I'll take advantage of this. So let's talk about some of the bigger areas of retirement accounts. So the 401k, I like to call it the OG of retirement accounts. They've been around since the late 70s, and this is the most common workplace sponsored plan. Now I keep using the term workplace sponsored. What does that mean? I work for myself. I cannot open a 401k. I just don't have access to it. Now there's something called a solo 401k that I have access to. It's for small business owners, but it's not the same. It's not the exact same thing as a 401k that if you work at, let's say Torchy's here in Austin, it's a taco place. You know, if Torchy's has a corporate 401k plan, it's going to look different from my solo 401k plan. So it's the OG, it's the most common one. It is only available through workplaces. The maximum personal contribution that you can make annually is $19,500. So that's how much money you can put in as an individual. Now, on top of that, your company might have a match. So over the course of the year, ultimately more than $19,500 can go in. And a note on this is the IRS changes contributions every couple of years to keep up with inflation. So for example, last year, 2019, the maximum personal contribution was $19,000. And this year we got an extra $500. They'll probably change it in a year or two to $20,000. And the very important thing about 401ks is they are pre-tax. So the money gets automatically deducted from your paycheck and put into the account. and you do not pay taxes on it the year that you make the contribution. You pay taxes when you withdraw the money in retirement. So you're basically putting your tax payment on pause for 30 years, and then you start paying it when you make the withdrawals. That's really important. The traditional IRA, so IRA stands for Individual Retirement Account. Anyone over 18 with earned income can open these. So that's really cool. These are very democratic accounts. And the traditional IRA works the same way as the 401k in terms of taxes. They're pre-tax. We love that. Now the Roth IRA is different. It's post-taxes. So you're paying taxes the year you contribute. The maximum you'll notice here on the screen for both types of IRA is $6,000. So it's significantly smaller than the 401k, which really as an individual drives me up a wall because it creates this huge investment cap. If you don't have access to a 401k, you can't invest as much, right? That's a real bummer. It's part of the reason we have a retirement crisis in the United States, which I'm also happy to talk about at the end. But these are kind of the three big ones. Now, if anyone here is a public servant, you're a teacher, you're a firefighter, something like that, you probably have what is called a 403B. And that is very, very similar to a 401k. It's just 401ks are for the private sector and 403Bs are for the public sector. That's the main difference there. There's a few other detail differences, but they work very similarly to 401ks. So now, this is really important. A lot of people think, oh, I opened my 401k, I'm investing. But that's not exactly how it works. Your 401k is the boat that I have here. The luggage that you bring on the boat is the actual investment. So just because you opened your 401k, now you need to put investments in there. You actually need to go buy Google stock or a treasury bond or something like that and put it on the boat. So that's really important. Okay, so basically to sum up everything I've just said, if you want to get started investing today, I hope you do. I hope you can go get started investing today, open an IRA or march on down via email to your HR department and say, I want to open the company 401k. Step one, open your account. That's the first thing you need to have. Got to have the account before you can put stuff in it. Then you're going to link a bank account. That's really important. Step two, choose a fund or an individual company to buy. So that's going to be buying that Google, buying that Facebook, buying that Blue Cross Blue Shield, whatever you want. And then step three, use the money from your linked bank account to purchase your chosen investment. So they're going to deduct it out of either your bank account or your paycheck if it's through your 401k. They're going to take that money, they're going to use it to buy the Google, and then boom, you're now an investor. Isn't that exciting? Isn't it so much easier than we think it is? Investing is just shrouded in this mystery, this haze, but ultimately we can break it down to fundamentally 3 steps. There are a few more steps if you're investing in a brokerage account, a non-retirement account, but I'm encouraging everyone to start with their retirement accounts. Okay, so now here's a big question I've been getting a lot about what makes the stock market move. Because again, we've been on a really wild ride, right? We've been on a really wild ride since March. And ultimately, this is what the stock market does. The stock market moves all the time. There is no one normal steady rate for the stock market. And I think it's really important that we all understand that we are the cause of it. Fundamentally, we are the cause of everything the stock market does. We as the collective. I mean, we invented the stock market. Humans invented it. It's not a naturally occurring thing. It's not like a tree, okay? So everything that we do affects the stock market. So like I said earlier, politics, when companies announce major changes, when Oprah says something, Oprah has single-handedly generated stock market profits. She's that powerful. But fundamentally, what it comes down to is, do people believe in the stock market right now, or do they not believe in it? So in March, when coronavirus hit and everyone was freaking out, we saw the stock market drop day after day after day. And that was because people were very uncertain about what they wanted to do with their money and what was a good decision. Well, should I be investing if we're going to see massive layoffs, or should I hold on to my cash? I'm not going to invest. That's going to cause the market to go down, right? That lack of certainty, that fear. Now, it's totally 100% impossible to predict how or when something will affect the market. It is impossible. Do not believe anyone who says that, okay? If you have an uncle that's like, I got a hot tip, be like, Uncle Barry, no, you didn't, sit down, Or if you have a friend who's like, well, I read this article and I'm telling you, Dippin' Dots is the next hot thing, Tell them, listen, you probably, maybe, but nah, I'm just, okay? You should run if anyone ever promises you a guaranteed return. If someone says, hey, I can guarantee you 10% in 2020, they are lying. They are lying. They cannot do that for you, okay? So just run away from that. Now, if someone offers you that, you can just be like, stop it, Bernie Madoff. Who here remembers Bernie Madoff? This is a story that truly still keeps me up at night. I mean, this man ran the biggest Ponzi scheme in the history of the world. I guess maybe there was one in like, you know, Mesopotamia where we didn't have written record, but we're going to go ahead and say Bernie Madoff is the biggest crook ever. He stole $64.8 billion with a B. That's so much money. That is mind-blowing amounts of money. This is what keeps me up at night. He stole this money. So here are quotes that I took from the court records. Here's how he did his scam, essentially. To induce new and continued investments by clients and prospective clients, Madoff promised certain clients annual returns in varying amounts up to at least approximately 46% per year. 46% per year, guaranteed. He was promising people, I can get you 46% in the stock market per year. That's insane. Does anyone here know how much the Dow Jones, one of our stock indexes, returned in 2019? I can't see you, so this is a rhetorical question. It was 25.34%, and that was a huge year. That was a banner year. People were very excited about that. This man was like, I can get you 46%. I can get you almost double one of the best returning years in the last 15 years. I don't think so, Bernie. Scammer alert. He also told his clients that the fee for his services would be based on approximately 0.4 share commission on the stocks that Madoff traded for such clients. So not only was he like, hey, you're gonna get 46%, but he was like, it's gonna cost you such tiny amount, 4 cents. 4 cents is how much it's gonna cost you per trade. I mean, the scam. It's too good to be true. It's probably too good to be true. Okay, so now that I have thoroughly scared you on Bernie Madoff / y'all are gonna be like, who's Bernie Madoff? Let me get on this Wikipedia page. Let's talk about basic things to look for in an investment, because I know that this is a #1 issue that most women deal with. This is actually a huge part of the investing gap, is that women are just flat out like, what do I invest in? And it's very important, if you take nothing else away from this webinar, please understand that there is not one perfect investment that like all the investment pros are putting their money in and just not telling you. That's not happening. I don't have all my money as an investment pro like tucked away somewhere and I'm like, I'm not going to tell these people on this webinar, tee-hee-hee. That's not happening. We all need to make the best decision for ourselves. And these are some things that we can use to help make that decision. So fees, you are going to pay fees 100%. When you invest. That's just a part of doing business, right? It's like when you go to the store and you want to buy a shirt and you have to pay for it. It's the exact same thing. If you want to use a brokerage company's services, you have to pay for it. Make sure your fees are less than 1%. That's really important. If you're paying 2.3% for someone to manage your money, that's really high. That's really, really high. Every year, 2.3%, think about that over 30 years. You're going to lose a lot of money. So make sure you also understand the types and the amounts, I apologize for my spelling error there, of fees in your portfolio. That's really important. The second thing that you want to look for in a brokerage is the investment options. So this isn't a brokerage, this is also in the account. So when you go and open your 401k at work, they're going to give you a list of options that you can invest in. So they're gonna be like, you can invest in this fund or this company, et cetera, et cetera. Make sure there's a nice healthy mix of a lot of different options there. You wanna make sure that you're seeing mutual funds and index funds and ETFs and individual stocks and bonds, right? You wanna have a lot of different options. If they're like, you can only invest in one thing, that's probably not a great investment, okay? That's kind of what happened with Enron. Enron kept telling its employees, like, put your money back into Enron in the company plan, and we know what happened there. Another huge scam. And then you also want to look for diversity within funds. So that's a really important thing that also people skip over, but funds can be diversified in and amongst themselves. Okay, So when do you get started? Here's people from one of our Bravely events, just loving that money bag. ASAP. So you can leave here and open an IRA today if you want. And then I have a quote down here. It says, time in the market is better than timing the market. So important for us all to understand. It's not about getting in at the right time and making $1 million in 4 days. It's about building a portfolio that you understand, that you feel good about, and you're excited about for 30 years, right? Time in the market is better than timing the market. Burn that on your brain. Okay. Oh, this is the same slide, my bad. So we're just gonna skip ahead. Skip ahead. Okay. So investing fears. This is another big thing I hear from people. Number one fear, I'm gonna lose money. But you definitely will, so it shouldn't be a fear. 100% you're gonna lose money at some point. I lost money in March. I also lost money in February 2018. I remember that. We had what's called a market correction, and I lost $3,000 in 1 day. Definitely don't earn $3,000 a day. So that was a real blow. But guess what? That money came back. And this is again why we invest for the long term. If you lose a bunch of money in March and you take out all your investments, we had a banner month in, what do we just had? What are we in now? June? May. May was a fantastic month overall for the stock market. And we had some of the highest days that we've seen in the last 3-4 months. And so if you had taken your money out at the lows, you're going to miss the highs. So you just have to understand there's going to be days where I lose money, but there's going to be days where I earn money. And I have to go through both in order to get where I want to go. Second big thing, I don't know what to buy. So again, think about the criteria we just went over. Reverse engineer your needs and goals. Diversify, low fees, think long term. That's the plan that you should take for your investments. Third fear I hear a lot of is, I don't know who to trust. Shop around. If you want to work with someone like me, I work with people as a money coach. There's also financial advisors, there's certified financial planners, there's investment advisors, investment managers. Make sure you're asking a lot of questions. Don't just go with someone because your mom is like, yeah, that's a good, yeah, she works for me, like whatever. Maybe you and your mom have different goals, different plans. So make sure that they are the right fit for you. Another question I get a lot is, should I start with the stock market or the real estate market? And honestly, either one is fair game, but for most people, it is easier and cheaper to start with the stock market. But that said, personal finance is personal. I'm not here just being like team stock market. Whatever works for you and your goals works for you and your goals. Okay, that is the end of our presentation. Here is where you can find me on the internet. I would super appreciate a follow. On Twitter, you can find us at BravelyGo. Instagram is definitely where I spend most of my time. It's at WeBravelyGo. We are also on Facebook at WeBravelyGo if you want to give us a like or a follow or what have you. So, okay, questions, comments, concerns. I'm going to stop sharing my screen. There we go.
Thank you, Kara. That was excellent.
Thank you.
Okay, fam. So now's your opportunity to engage with Kara. Send us your questions through the Q&A feature at the bottom of your Zoom link, okay? So Kara, first question. The Texas Women's Foundation released their 2020 edition of the Economic Issues for Women in Texas study. And in that, they found the makeup of the average Texas woman.
Okay.
She's a millennial, roughly age 36. She's a woman of color. She lives in the city. She earns on average $35,000 a year. And she works to support some type of family, her family, parents, children, whatnot.
Mm-hmm.
What would be a good first step for her?
Definitely finding out if she has a workplace sponsored plan. That's always where I think you should start. Go to your workplace and be like, hey, do we have any retirement plans? Because especially if it's a 401k or a 403b, where they're going to do the heavy lifting and take the money right out of your paycheck for you. All you got to do is sign up and tell them where to put that money. Let them do the work for you. You don't need to do that work. So that's one. Find out what is going on at your workplace. The second major thing, especially if you're a woman of color, is I would actually sit down and go over my budget and understand how much I have to invest each month. Because women of color are more likely to carry higher student loan debt. They are more likely to pay higher interest on that, and they get paid less. So that's less money in your pocket. And we have to understand all of those things in our own personal context. so that we understand how much we have to invest. Like maybe I have $200 a month to invest, but you have $1,000. So figuring that out, then you know, okay, I have the 200, I'm going to put all of that into the 401k, or I'm going to open an IRA.
Okay, thank you.
Mm-hmm.
What are your thoughts on investing in bonds?
Bonds are great, but bonds are very low volatility, which feels really safe. We're like, oh, great, low volatility. I love that. But low volatility means low growth. So if you are invested heavily in bonds, you are going to miss out on growth, which means you're going to miss out on money. So I would say it should be a part of your portfolio. It should not, especially if you are younger, be the dominant part of your portfolio. So if you think about it as a pie chart, you've got 100% and you're 22, bonds should be 10%, 20% of your portfolio. The rest should be stocks. If you're 55 and you're planning on retiring in 5 years, bonds should be a significantly higher portion of that.
Excellent. Thank you. We have an audience member who wants to know what are the resources to investigate possible investment firms in regards to ethical issues?
Okay, so ethical issues can mean a lot of things here. So if you could clarify that a little bit for me, like, do you mean ethical in terms of what they're investing in? Like you want to invest in, sustainable companies, or you don't want to invest in gun companies? Or do you mean ethical in terms of their practices, like how they're earning their money? So if you could just clarify that for me, I can give you a better answer.
Take your pick, either or. The longevity or the ethical practices?
So when it comes to what they're investing in, like what they're offering you as an investment, that information is on their website. So you can go and find that. There's also a company called Morningstar. I'll put this in the chat as well. That basically does, hold on, I can't type and talk. And they do like reporting on the stock market and on different companies. So they'll go and be like, like Vanguard releases new ethical fund or something. And so you can kind of keep up there. In terms of how people are making their money, because there's a lot of scammers out there. We know that. We live in a world of scammers. You should definitely be asking them questions like, are you commission only? Are you going to make money if I make money? Are you fee only? Are you registered? Are there any complaints against your business at the Better Business Bureau? Things like that. Okay,
thank you. Now you mentioned going out and finding a financial advisor that vibes well with you. Mm-hmm. What kind of questions would I ask that person to figure out kind of where they're at and if I want to work with them?
Yeah, exactly what I just asked, like how are they making their money? That's probably a really big one most people want to know. Other questions like what are the fees for working with you? How do you work with people? Can I call you? Are we only going to be communicating via email? Do we meet in person? How often do we meet? What kind of check-ins do I get? Are you just going to touch base with me at the end of the year and be like, here's how your money did? Is it a quarterly check-in, et cetera, et cetera? I think it's less about, in the beginning, it's really about sitting down with yourself and finding out, how do I want to approach investing? And so do I want to come at it from an ethical point of view? Like I will refuse to invest in, gun companies, or is it, I need someone to hold my hand, or like, I'm pretty hands off. Like, what are my needs? And then bring those needs to the advisor and be like, do you meet these?
Got it. Thank you. Mm-hmm. What do you feel about investment apps? Is that a good solution for folks to kind of tiptoe in?
Yes and no. Sorry, that's a really big question. Like, how do you feel about investment apps? So investment apps can be really helpful. They also might not be the tool that you need. Investing is so incredibly personal, y'all. It's not like, a question I get a lot is like, what's the best investment app? And that's totally going to depend on who you are and what you want to do with your money. So there's like a gajillion out there. I know Robinhood is very popular because it has no fees and it's very low cost to get started, but that might not be the platform that's best for you. It's pretty bare bones. It doesn't really provide a lot of information, like ongoing educational information, whereas something like Wealth Simple has a ton of blogs. They do videos, they do webinars. That might be more your jam. It's slightly more expensive, but it's a more cohesive platform. I'm not saying either way which one's best, but if you're interested in doing an app, research the app and again, figure out what you're trying to do and if that's going to be best for you. I do think it can be a really great way for people who are lower income or they don't have a ton of money to get started. Because some of the more traditional brokerages, they have like really high fund minimums. You have to have $3,000 to get started, and none of the apps are requiring that high of a minimum. So I think if you're like, I just want to get involved, sure, an app can be a great route to go, but which app? Personal decision.
Got it. So being mindful of the lower bar to entry. Excellent.
Yes.
Now you had a great number of stats towards the beginning of your presentation. Could you share some of the resources where you found these stats so that we can further educate ourselves?
Sure. So I love the Census Bureau data. I get a lot of my data from the government. I think that's a better source. I mean, maybe not our present administration, but it's a better source of information than like companies. You know, you have to understand that if Fidelity puts out a study, it's a little biased because it's a Fidelity study, right? So you need to just keep that in the back of your mind. Other places I like to go, I read the Wall Street Journal, I read the New York Times, I read the Washington Post, and they do a ton of reporting on the stock market and economics in the United States.
Excellent. Thank you. Mm-hmm. What advice would you offer a new solopreneur on how to budget their investments?
Well, first I would say, are you actually making a profit? There's a lot of people who start their own companies don't profit right away. So if you're not profiting consistently, don't worry about investing via your company. Worry about making money. That's the number one thing with any entrepreneur. But if you're like, Kara, I am making so much money, I don't even know what to do with it. Again, it's really going to depend. There's a lot of self-employment retirement accounts. There's a SEP IRA, there's a simple IRA, there's a solo 401k, there's the traditional and Roth. Which one's going to be best for your company depends. Like, is your company growing? Are you hiring employees? Are you just a one-woman show forever and ever? Because they have different rules, laws that you have to abide by. So I would go to the IRS website and read about each one and see which one works best for you.
Cool. Thank you. What about investing for our children's education? Like there's like the 529 and various savings accounts. You gotta feel on a really good solution for the majority of people?
No, there's not there's not one size fits all anything in investing for everyone. There's not going to be a solution that is the best for the majority of people. Cannot stress that enough. Now, that said, the 529 is a really popular plan. This is really important. I don't know where everyone's calling in from, but this is super important. 529s vary state by state. So the Texas plan is different from the Alabama plan, which is different from the Montana plan. And also you can open plans in states that you don't necessarily live in full time. So that right there, there's a whole lot to unpack right there. But a 529, for anyone who doesn't know, it's a plan that you can open up on behalf of your child, and you can put money into it that they can use for education. And education is a really wide term. It can be used to buy books, pay tuition. I think in some states it can be used for travel to and from college. So that's really exciting. Now, that said, obviously we are living at a time where college is like how to pay for college and the cost of college is a very hot topic. And it's very possible that in 10 years, 529s are going to be obsolete because we have a new way of paying for college, right? It's also possible that we don't do anything. So I just mentioned that because, again, it's not necessarily the best thing for everyone, but it's not necessarily a dumb idea. You're just going to have to figure out your own plan. I'm sorry, I feel like I keep saying that, but it's very important everyone understands that.
No, thank you for that. It's good to hammer home the honest truth. So, okay, so we have a question from Doris who says, you're awesome. She wants to know about good Roth IRA brokerages that you might recommend, or you have any feelings about certain Roth IRA brokerages so that people can get a better return?
Yeah. So again, the return will depend on what you're invested in. It's not going to be up to the brokerage. Like, it's not like Fidelity is guaranteeing everyone 36%. You know, it's what have you invested in at your Roth IRA at Fidelity. So that's really important that everyone understands. That said, where you do your investing matters a lot, mostly because of those fees that we talked about. Again, if you're at a platform that has 1.5% fees, that's really high versus a platform that has 0.25% fees. So I would mostly look into your fee schedule is usually what they call it. And that'll break down like you're paying X, Y, and Z fees. Here are the percentages. And then you can figure out like how much that adds up to in a dollar amount for you. Now, in terms of like, are there brokerages that I like? Yeah, there are some that I like and there are some that I don't like. Like BlackRock is incredibly ethically compromised. I would never invest there. I would never invest via Wells Fargo. They're not great companies. But like we're all compromised under capitalism and there's no one is like perfect. So I think it's more so about like what's convenient for you, what's going to actually keep you investing and what makes sense numbers wise with those fees.
Okay. So to clarify, if I have a Roth IRA and I'm not getting a lot of return, that might not necessarily have to do with the organization that I'm with, but it could have to do with what I personally am using that investment for, like where I have my investments at.
Yes. And actually I have a really good Instagram story on this that I just did a couple days ago. It's saved as a highlight because my boyfriend had been investing for 8 years, getting a 2% return in times when the market was returning 18, 19, 25%. And it was entirely because of what he was invested in, not where he was invested. So he lost 8 years worth of returns because of what he had been investing in. So that's, if you're interested, I explain it more on the Instagram story. I put the link to it in the chat to my Instagram page, not to that story, but it's like the second or third highlight.
Excellent. Y'all check that out. Okay. So I have another entrepreneur question.
Okay.
Obviously it's going to be individualized. Do you have a little bit of guidance on balancing investment in your business versus investment in your retirement? Because, you know, we have to have that trade-off.
Yes. So I think the number one factor here does depend on age. Again, if you're 22 and you're starting your business, it's very different from if you're 32 starting your business or 52 starting your business, or even 42. If you're in your 40s, you have to be investing for your retirement. I don't care what's happening with your business. You have to be taking money out of the business to invest for your retirement. That's non-negotiable. Otherwise, you're going to retire into poverty. If you're younger, I think it's really important that you understand your business budget. And if you are like, I don't have a business budget, you should get one. And I have a tool on my website, which I also linked to in the chat, that can help you figure that out a little bit. You have to know what's coming in, how you're making your money, and how much it costs your business to run. So if you're making $10,000 a month, but it costs you $9,000 a month to run your business, and you have to pay taxes, now you're in the red. So you're not actually profiting anything. You're making 10K, but you're not actually profiting anything. So sit down and run your numbers and get real clear on what you're earning, how much it costs you to earn that money. And then you now have the question of, what can I invest? Start small. You don't have to start off $1,000 a month. You can start off with $50 a month, especially if you're going an app route. And honestly, that's a huge win. Only 55% of Americans invest in the stock market at all. And so if you're one of them, congrats. Like, don't feel like you need to be doing it the best and the brightest. Don't get sucked into the, you know, the Instagram highlight reel or like whatever your friends who are in totally different financial positions are doing. Know your own numbers and, you know, live your best life.
Excellent. Great advice. Thank you. And I'm going to take one last question from the audience. And this one, I think this one's fun, and I'm really happy to hear your thoughts on it. What do you think about Bitcoin?
You know, I don't know anything about Bitcoin. I don't really know how it works. I can't understand how people are like mining. I know it's really bad for the environment, and I don't do any Bitcoin investing. I think it's probably going to be something we see become mainstream in the next 10, 15 years. That said, I know that people have gone bust in Bitcoin and people have become millionaires, which is the same story in the stock market. So I don't really have good information on that.
Well, that's a great way to end the episode. So thank you. It has been an absolute pleasure. Thank you so much for joining us today. Everyone, Kara, throw your info back up on the screen for us.
Yes, let me.
And while you're doing that, feel free to check out HERdacity's website, HERdacity.org, to learn more about the various webinars and workshops that we host every month.
All right, I lost my thing. I'm sorry. I have a page. I'm a window person. I have like 17 windows open. and I can't find where it went.
Okay.
That's
well,
my
y'all,
bad.
y'all check out Kara's podcast, which is the Fair Sense podcast, where she talks about finances for women.
Yeah, I'm
So
just going to
thank you again for that. And we have one more.
There's my website in the chat, bravelygo.co. And again, it's at We Bravely Go on Instagram and Facebook. So
excellent. Thank you again for joining us today, Kara. And thank you all for attending. We will see you next time. Bye.
bye, everyone.